Good afternoon. This is Kaylee, the teacher of finances. I'm so excited to be a part of the Georgia Christian Business Network. I have Miss Lisa Bailey with me, and we are going to continue our series on Life Insurance Awareness Month. We have 1 week left of September to embrace it and tell as many people about it as we can. So we are going to dive into IULs today. I know that I see a lot on social media and network marketing about IULs. I'm sure Miss Lisa does too. So we just wanted to kind of dive in, explain to you what they are, how you can use them, why they're beneficial to you, and just any questions that come about, we'll answer them, and we'll kind of just go with the flow on this one. All right, Miss Lisa.
Good afternoon, Miss Kylie. Good to see you. Hope you all had a wonderful weekend. Happy Monday. So yeah, we are continuing our series on life insurance, some information, the good, the bad, and the best about life insurance. And yeah, today we're going to talk about IULs. It's actually one of my favorite insurance products. Okay. So for all y'all who don't know what IUL is, we're going to explain it to you, kind of give you some a little bit in-depth information about IULs, and then I'm gonna let you know why it's one of my favorite products. And just to be completely transparent and honest with you guys, I've always knew about life insurance. I don't know if you all have too, and Callie, you can chime in too, from childhood. But from childhood, all we know was life insurance. You know, the insurance man maybe come around and pick up the premium, you know, from the house, and when they used to go door to door and all that type of stuff. But I didn't know about IULs until I studied and got my life insurance license about 5 years ago. So I'm only been in insurance 5 years. And when I learned about this product, I was like, what? Where have I been? Why I had never heard about this? This is a fabulous product because it has so many benefits. It has dual purposes, and everybody needs one. Okay.
Yes, yes. This
Would
is
you agree, Kelly?
absolutely. This is that product we kind of talked to you guys about last week when we said it goes with you for life, and you can get massive amounts of coverage because there's so many things that you can typically get massive amounts of coverage in a term policy, but all those premiums just go there, and then at the end of the term, where are those premiums at? And with an IUL, it's amazing because you get that massive amount of coverage up front, but then at the back end of the policy, you get cash value that you can use. You can use it to go on a vacation. They don't care what you use it for. And the money that you pull out of it is what called tax free, which is even a better benefit. So,
Mm-hmm.
which we're not CPA, so we don't go into a lot of the taxation and all that. But it is good to know that the money you pull from that account is tax free because you've already paid taxes going in, so you're not going to get taxed on the outcome of it, which is amazing. So IULs, I totally agree with Miss Lisa. I think everybody needs one. One thing that, like she said, we want to tell you the good, the bad, the best of everything. One thing about IULs is your health has to be on point. You have to have your health at a good, you have to have it be in good health to get approved for an IUL. And that's what gets people, in a situation where they've heard about them, but they don't go ahead and get that policy. Well, then life happens and some health condition comes about, and now they can't get it anymore. So an
Mm-hmm.
IUL is something you definitely want to start when you're younger because you are going to get, like I said, that high coverage. You can get high coverage amounts, death benefit amounts, but then the longer you have it, the more cash value you're going to have in the long run. I know last week we had some people ask about their children and policies for children. IULs are amazing for children. You could always do a children whole life policy, which is great, but you can do an IUL on kids, and you can use that for college fund. You can use it for their first car. You can use it for all different types of things. Because imagine if you this is what's crazy to me is imagine if you have a baby and you put $50 a month into an account for a baby. By the time they're 18, the cash amount, that the cash growth in that policy is going to be insane. You're going to be like, wait, I can pay for college and buy them a car almost.
Honey, that's that $1 million baby. If y'all ever heard that term, $1 million baby, that is it's coming from putting your children inside of an IUL whole life permanent policy. So I wanted to bring out some of the characteristics of an IUL, okay? IUL stands for Index Universal Life Insurance Policy. It's IUL, Index Universal Life. And it has the word index in it because it is tied to an index, which is your S&P 500s, your S&P 100s, anything on the stock market. It's the stock market indexes. And anytime something is linked to the stock market, just like with stock market investing or your 401ks or your Roths or your mutual funds, it's going to grow exponentially. You're going to get so much more growth and interest from it when the stock market is doing well, of course, right? Or when the indexes are doing well. So it's attached to that. Now, one good benefit I like about IULs is whenever the stock markets or the indexes are going down, which y'all know is up and down. That's why it's a little risky. But when it's up, it's up. And when we're up, we're good. We're making money. We're growing that cash value, right? But then when it's down, the good thing about the life insurance portion is the life insurance companies has a stop, what they call a stop or a floor, where if it goes down, it no longer builds interest, but it does not lose any at all. Correct, Callie? You do not lose your money. Whereas if you got your money in a 401k, oh, you losing. Absolutely. If y'all remember when 2020 came along, all the stock markets dropped, indexes dropped, and we all lost money in our 401ks, including me. But luckily, that's a long-term play, so you don't worry about it. It goes up and down. But this product, the IUL, you're not going to lose.
No.
You're not going to lose.
Airbag. So practically the way it works is think about an airbag. Whenever things start to crash, an airbag pops out and it saves you, right? So that's the same way these policies are set up. When your stock market goes to fall and people are losing money, that airbag is going to pop out and it's going to save your money. So now when everybody else is playing catch up because they lost 20 or 30%, you get to stay where you were at, and now you just get to keep compounding over it. So you get compounded interest in the stocks, of course, because they're going to compound on what money you have. But with these, not only do you get the compounded interest, but you never have to catch up. So how do these types of index accounts outperform the stock? I get that question all the time. They outperform them because you're never playing catch up. Never have to make it, recover. So yes, that is totally right. I love it. That's such a good point with the index universal lives, because they do compound and grow, and it protects that money, and they're great products to have.
So I wanted to bring out another benefit. IULs, or the Index Universal Life Policy, is a permanent policy, okay? It's a whole life permanent type policy. So it's going to cover you for the rest of your life. So that's another good thing. You ain't ever got to worry about whether I'm going to be covered or not, because it's not like the term. So if you're comparing types of policies, the IUL is a permanent whole life policy. Okay, so it's always there for you. But what the cash value portion of it, it gives you the option to be flexible with your premium. Yes. So say, for instance, something happens in life happens, and we can't pay our premium. Well, we should have some cash value in there that we can use to continue to pay our premium. And we talked a little bit about that last week. But with this product, it's the same way. You can use that same benefit. You can use your cash value if you cannot make the premium. Now, get this. Let's just say things are going well. If you work a full-time job, you're working in corporate. Some corporate organizations still give bonuses, right? So if you're getting an annual bonus and you're looking for somewhere to put that money instead of spending it frivolously, like, hey, I'm guilty, but I'm learning. So now that I know better, I do better. So I take a portion, if not all, of that bonus money I have, and I can stick it into this IUL.
Yep.
Okay. So that's more money in there that's connected to the index that's going to grow more interest on my money. Yep. And it's safe. I ain't got to worry about losing.
It's like a savings account on steroids.
Girl, Come on, Callie, tell them about it.
That is,
Tell them
it's
about
a
it.
savings account on steroids. I mean, because think about it, in your savings account, even now in your CDs, you look at a CD
Yeah.
at the bank. Your CDs, they're giving you maybe 4.65%, maybe, and
What?
that's what they're advertising around here. But I mean,
Oh,
looking at
okay. You in Texas, right?
yes, yes,
Okay, yeah. Callie's in Texas. I think the high around here maybe be 2.5. I
yeah,
don't know. I
yeah.
ain't even looked at a CD.
Ours right now, they're advertising it, but that's also doing like a 10-year too.
Oh yeah, long term.
It's
Yes.
long term, same thing.
Yes.
But
Mm-hmm.
when you're looking at it like that, that's where you kind of compare the two. Is the CD you're guaranteed a 4 point whatever or a 2 if you're in Georgia
Mm-hmm.
every year. But
Mm-hmm.
with this, you're looking at they can average. I know on any of the illustrations I ran right now from the last 20 years, they average anywhere from 10 to 12%. And so 10 to 12, even if I get 10 to 12 out of 10 years out of the, let's say, 12 years I haven't invested,
Mm-hmm.
I'll take 10 to 12 over four.
I'll take the 10 to 12 any day, girl.
Yeah, yeah.
What you talking about?
And so you can kind of see where it's like I always say, it's a savings account on steroids. You get massive amount of interest returns, with these types of accounts. And then again, you get the tax break on the end because the money you pull is tax free. When you're
Mm-hmm.
looking at CDs, you're going to be you're taxed on all kinds of stuff with CDs. So there's
Mm-hmm.
minimal fees, same thing. One thing I wanted to talk about too, because I see this online all the time. People say, oh, well, you don't, the cash value. They talk about the cash value and the growth, which is what we've been talking about. And they say, well, I've had a policy for 5 years and I have very little cash value. Okay, here's why. This is like a retirement product and a life insurance product mixed together, and they had a baby. That's,
Mm-hmm.
you can understand it. So you have a life insurance benefit here, but you also have a cash value benefit here. Think about your life. The chances of you passing, you're more of a risk, right? Like, let's say accident or things like that. So you have to pay for the life insurance side of it at some point. And so you're looking at young people. So if someone young passes, it's likely going to be an accident. It's not going to be health or illness. It's likely going to be an accident. And so your premiums up front are paying for your life insurance benefit. And then on the back half of your policy is where you're really getting that cash value buildup. And so I always
Mm-hmm.
like to explain that to people because they get confused as to why I don't have cash value up front. Well, it's a long-term product. It goes with you for
It's
life.
long term.
And so even when you're looking at, there's other types of whole life products out there like a universal life that's the same way, but it's more like what we talked about in a CD. You get a very minimal interest, some cash value in the end, but it's not like the IUL. The IUL, you're looking at being able to have large death benefit amounts and large cash benefit amounts in the long run. You just have to understand that your premiums are split up a certain way based on the structure of the product.
Absolutely. And you hit the nail on the head. It's the way it's structured. Now, when you're dealing with IULs, you just can't take an IUL from any old body in any old place. Okay. There's a lot of insurance companies out here. Okay. This is a huge industry. So everybody's selling life insurance. I think even some of the local car insurance places is now going into the IUL business. So you have to understand what you're getting into. Now, I'm just going to be honest. This is my perspective. A lot of these big name insurance companies is going to sell you anything, and then they're not going to sit there and explain to you what you're getting step by step. They're not going to take the time out to give you a good explanation and break it down into layman's terms, because they're going to throw these big terms at you, and you're going to think it sounds good, but you don't really understand it. And because everybody's in a hurry, they don't want to stop and take the time to ask questions and to understand what they're signing and what they're getting. Now, when you hook up with someone like me and someone like Callie, who does this on an independent basis, I do it because I care for my community and my family and my friends and my clients. I want to put them in the correct policy. I want to put them in the correct product. I want to explain to them what they're getting. Because listen here, if you get something and then you wind up can't afford to pay for it, and so you let the policy lapse, that looks bad on me. okay, not just on you. So I like to take my time with my clients and explain these products. So, like Callie said, the IUL is a long-term play, okay? It's not something where you're going to get your cash value in 5 years. Don't look for it. I always tell mine 8 to 10 years. This is long-term. This is something that you want to set up in your 20s and in your 30s if you can, and then watch it grow to your retirement years, okay? Now, if you are a little older, if you're in your 40s or your 50s, this is something you still can get into, but I like to tell people, bring some money to the table. Okay. It's not just your premium. If you got money sitting in a money market account, or you got money sitting in a CD, like Kylie's saying, and maybe it's getting ready to mature, and now you're trying to figure out what to do with it next, you can put a lump sum of money into one of these policies. Mm-hmm. Yep. A lot of people don't know that, but you can. But there is a max. Now, each situation is different. Everybody's situation is different. So you just have to sit down and speak to one of us about it. But like Callie said, it's good for retirement. It's good for setting money aside for a retirement. Another thing that you can do is the premium. Let's say the premium is $150. You pay that, but you can pay an additional $100 if you want to up that cash value. Yeah. And then you will see cash value quicker inside of the policy if you're looking to get, to pull the money out within 5 or 6 years.
Yeah, absolutely. And if it's one of those situations, with the clients, if they have a job and they have a 401k, then use it as a supplemental, because again, you never know what your money's going to do in the stock market. You may, if you were in 2008 when the housing market crash happened, people lost 50% overnight. And so you don't know what's going to happen. And so that gives you, if you talk to any person in the financials, if they're halfway decent of a good advisor, they're going to tell you, you want to have you want your portfolio to be broad. You want to have multiple things. Don't bank on one thing.
So diversified.
Yes. And so this is a particular product that, again, gives you that life insurance benefit, which everybody needs, but also has the option for you to utilize it as a money growing tool.
Absolutely. And another benefit, and we talked about this last week, is you can also have riders on these IULs of those, the chronic, critical, or terminal illnesses, riders as well. You can stick those on there. So then you're covered in that as well. So you covered on many fronts with this IUL product.
Yeah. And some companies even give you the option to add accidental too. So if you were to pass in an accident and your policy was a $200,000 policy, your family's actually going to get $400,000. They double it in an accident. So sometimes there's even the option of that, just depending on the carrier and the company.
Absolutely. Absolutely. So listen, if y'all looking for a product, and like Callie said, if you have children, this is perfect for your children. Start them off in a whole life or an IUL product and watch this money grow for their future. Okay. Yeah. College money, down payment on a home, whatever. I know last week I said, get your babies a whole life policy. But listen, if you want to be aggressive and you want to give them more money, honey, put them in one of these IUL products, honey.
You're a grandparent and you have a savings account for your grandkids. Take that money, like Lisa said, you can put it in a lump sum. You do a lump sum up front, and then you set up your monthly premiums after that. Take what you have in a savings account and move it over there, because if it's a savings account, you don't want them touching it anyways. This isn't, it gives them the option to not touch it, but then allows it to grow, and you're going to double the money you would be getting in a savings account easily.
Exactly. And how about this? Let me throw this in here, just dropped in my spirit. Honey, banks ain't loyal. Y'all have seen a couple of banks fail in the past 5 years, right? Ever since COVID. And even before COVID, banks was failing. Banks ain't loyal. We don't know what bank gonna get ate up by a big bank. It's just ridiculous. Listen, life insurance is one thing that's for sure. Life insurance ain't gonna fail. Some of the companies may fail, but the industry is not gonna fail. The company I work for is Transamerica. It's one of the biggest ones in the industry. So I'm trying to tell you, they have all these products available for you. They're one of the what they say for the IUL, one of the most competitive companies that offer the IUL. But I'm telling you, nowadays we need to look for something that's safe.
Yeah.
Safe and secure, less risk, because we don't know what this economy is going to do.
Yeah. And you
But
know what the thing is with the insurance, just and this goes for any policy because we're talking about insurance today. With the insurance companies, like I work for Transamerica too. I work for Mutual of Omaha. I have a bunch of the big, well-known carriers that I'm contracted with. And with that, the way it works is if for some crazy reason the company were to have issues, there are structures and policies in place that allow for the other companies to come in and take all the assets and pick that company up. So then even if you have a company and they were to have an issue and maybe go out of business, if they were an A-rated company, another A-rated company is going to come back in there behind them and take your company name is going to change, which is why we told you the other day, stay with your agent so you know what the name of your company is and what's going on with your policy, because the name of the company could change, but it's not just going to disappear into the bliss. Like you're just be gone. So that's another thing. And then I know we're almost over on time, but another thing I wanted to say about these policies is they've been around for years and years and years. So McDonald's was started out of an IUL policy. JCPenney's was started out of IUL policy. And there's several other well-known figures.
Yeah, I think I heard Disney too use life insurance to help start. Yeah.
So there's a bunch of
grow it.
Big name people out there that had businesses years and years and years ago that used cash value from their policy to start the business. So they've been around for years. With the index accounts, same thing. You go look at an index account, go look it up and tell me how many times they've lost money. They don't. That's the beauty of it. So if y'all have any questions, I know we've been trying to keep it right at 20 minutes. You can obviously tell we're both passionate about these products because we just going and probably could. But if y'all have any questions, like we've told y'all the last couple days, please let us know in the comments. Send us a direct message. We would love to answer any questions you may have about these products. Lisa is in Georgia. I'm in Texas, Oklahoma, Virginia, all kinds of different states. So wherever, if you're not in Georgia, contact me. If you're in Georgia, get with Miss Lisa. We would love to help you. Thank you, Beth. I love all your comments today, Miss Beth. It's nice that you were able to join us live today, too. If you don't have anything else, Miss Lisa, we will see you guys on Wednesday. We're doing Wednesday evening this week, and we will be back Wednesday for another educational moment on life insurance.
Yeah, I hope all this information was good for you all. It's definitely good for me. I am so much passionate about it. This is my passion. This is my ministry, honey. I'm going to tell y'all one day. Well, I ain't going to tell you. I probably won't tell y'all during this series, but follow me on my page. I talk about my story. I talk about my passion, where this passion comes from, what I had to go through, in my family, not having life insurance. And it's something that I would not wish on my worst enemy. Okay. It's the time now is to get your financial affairs in order. If you don't have life insurance, you need to have it. There's no excuses anymore, because I and the teacher of finance, Ms. Callie, can show y'all how you can afford life insurance. Okay. It's a way, and we are here to help you get to that. So thank you so much for your attention and for joining us on this afternoon. Pray you all have a wonderful rest of your Monday, and look forward to seeing y'all on Wednesday night, 7 p.m.
See ya.
Eastern Standard Time.
Yeah.